Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Oof, there is plenty to talk about this week. To get things started, though, let's recap what happened in the markets.
Yeah, if we start on the cattle side of the equation first, feeder cattle this week were steady to $4 higher. On the fed cattle side, there's not been a lot of movement as of late this week, so we'll see what happens. But right now, I'd actually think we're going to be weaker by about $3 for the week in terms of live cattle. In terms of that August live cattle futures contract, down nearly $1, while the August feeder cattle contract also down about $1.60 for the week. On the choice box beef price, we were actually up 51 cents for the week, so a little bit of strength relative to a week ago. We were up in all of those components except loin prices were lower this week on the beef side. On the pork side, been a tough week in pork markets by and large. The barrel and gilt cash price for the week down nearly $4 this week. The August lean hog futures contract closed down about $2.80 this week. It's only lost nearly $12 over the last 3 weeks on that August contract, so it's been tough in terms of hog futures markets. A lot of that weakness this week probably had to do with what was a much weaker pork cutout value, down more than $4 this week on the pork cutout value. I think we can point at picnics, hams, and bellies all down this week, but those three products in particular are down more than 30% relative to a year ago. Leading the way in terms of that lower pork cutout value.
It has not been a pretty week for pork cutout values. As we take a look at that, I mean, we've seen days where bellies have been down over $9 in that they opened that way and ended up that way during the day as well. Talk to me a little bit about what's behind that decline.
Well, I think certainly when you look at just overall supplies that we've been putting on the market, that has a lot to do with it. But I would also begin to remind us that if you look at where we are seasonally for these pork values, we tend to talk about June, July being the peaks, if you will, and we seasonally decline usually as we get larger supplies as we go later in the year. And that's certainly what we see out of the markets now. I think across the board, we've seen a lot of weakness. Now, bellies actually, if you look at where we've been in July thus far, actually stayed above their kind of 2012 to 2016 average. And I think that has a lot to do with strong bacon in particular, as we always talk about all the time, being helpful there. But when you look at almost every other component, they're running well below their 2012 to 2016 average. Let's just take hams for a minute. July of 2013 through 2016, they were over 85 cents a pound. Yet when you look at where we've been here in July of this year, 55 cents. That 30-cent decline has certainly taken some of the luster off of hog prices as well. So much of that seasonal move, again, worries me that we'll continue to have some pressure on these prices moving forward.
Do we also get a little worried about the whole trade conversations? We know that, for example, hams, a lot of U.S. hams go into Mexico. Does that impact the price support there as well?
Absolutely, it does. And I think we all hear some of the discussion going on about whether we get a potential bilateral with Mexico here anytime soon. And if that were the case, I think that helps us on the ham side. Instead of being 30% below year-ago levels, if we could pull that to where we're 10 or 15% below year-ago levels, all of a sudden we might add $2 or $3 to the carcass weight hog price out there. So not going to save us by any stretch, but certainly be a move in the right direction. So I think that's important, and we have to keep reminding ourselves that Mexico is probably the more important market for us in terms of just the sheer amount of hams that have been going south. The Chinese market does matter, but it's much more some of that byproducts that are important going to China. So if we could get Mexico to reduce tariffs on our products going there, I think that's helpful.
Scott, I want to talk a little bit too about the decline in slaughter numbers this week. We have seen the decline in wholesale values. We've seen cash prices drop off a little bit. Does this also get a little worrisome because the slaughter totals for this week are down significantly from where they are not only a week ago, but where they are on the year?
Yeah, exactly. This has been a a really, really slow week in terms of hog slaughter. I think we started the week with the Marshalltown, Iowa plant that had to do some fix as a result of the tornado that went through there last week. But as we end the week here, numbers continue to stay down. I think the Smithfield Foods upgrades that we see going on has certainly slowed. We can't continue with this kind of slaughter numbers week after week, or I know what happens to barrel and gilt weights as we go forward. So hopefully this is a one-year blip, and a lot of folks maybe are actually trying to get ready for what are going to be some fairly large runs as we get here late in the year. But if we continue at this snail's pace, and packers aren't interested in buying more hogs here in the coming weeks, we'll blossom weights for sure.
And they certainly haven't had to work hard to procure hogs this week.
No, and I think there are a lot of hogs to be had out there as well, so it's not going to change anytime soon.
Let's talk a little cold storage. That report came out this week. As we take a look at the total red meat and poultry stocks, where are we in comparison to where we were the previous month and last year?
Yeah, so if you look at what we got out of that cold storage report, 2.5 billion pounds of red meat and poultry. That was actually down slightly from where we were a month ago. Yet I know we've gotten a lot of recent press reports about that mountain of meat out there. I just remind us that we're actually down slightly relative to last month. A lot of that had to do with pork stocks in particular. We were about 10% higher when we went out of May in terms of pork stocks, and now you look at the June numbers, and we actually were right at year-ago levels on the pork side. So I would say red meat's in a much better situation than what we're seeing on the poultry side. Chicken stocks have been large all year long, and they remain that way. In fact, when you look at just red meat by itself, it's a little below 1 billion pounds in the June report. And again, that was down about 80 million pounds from where we were in May.
Do we worry about creating additional competition then at the meat case if we're seeing this mountain of chicken stocks? Does that even put a little bit more competition for dollars when we're thinking about the total meat that's available for purchase?
So I think all else equal, that's probably true, Megan, that folks will look at some of that switching. However, I continue to argue that the substitution among meats is a lot less than it used to be. And I think much of that substitution in total has a lot to do with just what's happening on the restaurant side. There, we don't see a lot of switching in menus very often. It takes pretty large price swings to make restaurants to decide to make menu changes or even menu price changes. If, however, they decide they want to feature a lot of chicken products on the menu just because of how cheap it is, that certainly could be troublesome as we got lots of meat of all types here for the remainder of 2018.
I think it's actually National Chicken Wing Day today, too. Just a side note.
There you go. So we're out here promoting chicken wings today.
Just today only.
That's right.
Scott, let's talk about the economy as it relates to agriculture. The president teased a big GDP number today, and he didn't disappoint. It was, more than 4% growth. How does that impact, or what does the ag industry and the ag economy take from big growth like that?
Yeah, so number one, I'll say, all along, I think we've been talking about domestic demand that's been fairly strong for meat products as we've gone through 2018. The 4.1% increase in second quarter GDP that was announced today, nearly double of what we did in the first quarter. All of that corresponds very nicely with the strength we've seen in meat demand. So yeah, we might have some lower prices, but given the quantities that we're moving and maybe a little bit of slowdown in the trade growth, I think these GDP numbers have been helpful to keep market prices higher than they otherwise would have been. And I know folks may not be very happy with that answer, but thank goodness we've had fairly strong demand, or we might be in a very different situation on prices.
Scott, I think as we wrap up this week, we have to talk about the biggest news that came out earlier this week. The aid assistance package announced by the president, up to or $12 billion, correct? Am I right? B with a B?
That's correct. Yes.
So as we talk about that, how does this break down for livestock producers, first of all? And secondly, what does an assistance package look like potentially for distribution to producers?
Yeah, so I don't think we have all the details yet in terms of exactly how that up to $12 billion will get out to producers of different commodities. I think in some cases we're going to talk about things like school lunch buys that might try to help prop up demand for different types of products. That might be where you could see buys for dairy, buys for pork, for example. We might see some direct payments going out to some commodities trying to offset what would be lower prices. I think we're going to see a lot of discussion in the coming weeks about who gets what. I won't be surprised for there to be a lot of struggle or fight between commodity groups about how much should each of these groups get in response to the effects they feel they've seen as a result of tariffs that have been in place. But certainly, given how those dollars get to either producers or how they're used, is important in this discussion of ultimately the effects of those dollars.
We've seen specifically on the livestock side, and I guess maybe let's talk hogs, for example. In recent weeks, dramatic declines in prices. Is a lot of that related to uncertainties with this whole tariff and trade war game? And how does that play in this posturing for dollars and assistance?
Yeah, so I think you can say this for all commodities that are in this situation right now. Number one, all of them have increased supplies as we've gone through 2018. And so when you try to dissect, if you will, how much of the price decline is a result of tariffs versus how much is a result of more production or other factors, it is impossible to actually tease that out. You can estimate it, but I think you could find three economists and get three different answers in terms of what the exact effects are. So it's no easy task to figure out how to allocate these dollars. And I remind folks all the time, you put these dollars into agriculture, it also then makes us continue longer down the path that we're on. We don't get adjustment likely very quickly as a result of trade assistance happening. So we'll wait and see what we get at the end of the day. But I think there's a lot of work left to be done to see how those dollars get out.
Do we also have to toe a pretty or tiptoe around some lines as it comes to WTO violations and those types of things, especially because the administration has taken such a hard line with other countries that they felt have violated the WTO?
Potentially, I think the up to 12 billion was chosen thinking about some of our AMS commitments in particular. So we may be okay in terms of where we sit. Of course, folks can decide they want to take a WTO case against us. We all know our experience in those WTO cases is that it takes multiple years to get to the end of the game. So maybe by that point, some of this is figured out. But I do think you have to pay attention to those commitments that we've made via WTO.
Well, it'll definitely give us plenty to talk about over the next few months. Scott, anything else this week?
I think we've covered most of the news that we have. Maybe not all that positive, but it is the news we have for this week.
And what are we looking ahead to next week?
Yes, we're going to get a couple things on the demand side. Restaurant Performance Index out next week, as well as another jobs report. A little different flavor for us next week. USDA will give us an estimate of land values to see where those are moving here in the United States.
All right, Scott, looking forward to our conversation next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.